This was the week crypto stopped listening to the world and started showing us its own problem. It started ugly. Midweek, Bitcoin broke below $73,000 to a 6-week low, and nearly $1 billion in leveraged bets were liquidated in a single day. More than 9 in 10 of them longs. The triggers were macro, the Iran flare-up, and a wave of Treasury settlements pulling liquidity out of the system. But the macro is the market's channel's beat, and we'll leave the geopolitics there, because what crypto did next is the actual story. By the end of the week, the macro picture flipped. A tentative US-Iran de-escalation eased war fears, oil fell, and US stocks pushed to fresh record highs. Risk was back on everywhere, except crypto. Bitcoin didn't bounce. It sat near $73,000 while equities ran. And that non-reaction is louder than any rally. So why didn't crypto follow? Because the drag isn't coming from outside anymore. It's internal. Spot Bitcoin ETFs just posted 9 straight days of outflows, the longest streak since they launched in early 2024, bleeding roughly $2.8 billion, and more than $4 billion since early May. Bitcoin underperformed the very AI and chip stocks that were busy setting records. And underneath that, a quieter signal. CryptoQuant flagged that the amount of Bitcoin held by long-term holders just hit a record, normally read as a bullish sign of conviction. Their take was the opposite. It's not conviction, it's a shortage of new buyers. The coins are sitting still because nobody new is showing up to buy them. A buyer drought, not a sell-off. A few threads ran underneath all of that. Ether spent the week in a genuine standoff. Even as it clung to the $2,000 line, Standard Chartered reiterated a $4,000 target, while futures traders piled into one of the largest short positions on record and retail kept buying the dip. Conviction on both sides, no resolution yet. On the infrastructure side, the SUI network went down again, its second outage this year, a reminder that fast and cheap means little if the chain can't stay online. And a somber one, Ondo Finance, one of the bigger names in tokenized real-world assets, announced the unexpected death of its founder, Nathan Ullman, with its president stepping in to lead. A hard loss for a corner of crypto that's been one of this year's few consistent growth stories. It wasn't all gloom. Over in Asia, Samsung Securities took a stake in the operator of South Korea's biggest crypto exchange, proof that even in a soft tape, institutional money is still picking its spots. So where does that leave us heading into next week? Honestly, undecided. And that's the precise read, not a dodge. Outflow streaks like this one have, in the past, marked local bottoms rather than the start of crashes. And the money leaving Bitcoin funds wasn't all leaving crypto. Some rotated into Solana products, which looks more like reshuffling than fleeing. The next real push, up or down, probably comes from regulation, not the Middle East. If you've been following our warning signals thread, this is one of them coming into focus. The week crypto stopped trading on the world's headlines and started trading on whether anyone new still wants to own it. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.